Okay, let's open up protective stops. Now, we're going to look at these rules all over again because in setting your stops, once again, you must understand these rules. The wave principle is highly regarded as an analytical tool, but many traders abandon it when they trade in real time, and that's because they don't understand it well enough, quite frankly. They don't think it provides defined rules and guidelines of a typical trading system. Well, if they don't know about these three rules, it's because they really haven't been trained in Elliott Wave. These are basic, okay? If you understand these three rules, there are going to be tons and tons of things you can do with these that will double check yourself when you're making a calculation for an entry, or help you to prevent losses because some rule will break. You'll see the market break a rule, and it's really not breaking a rule. It just means your wave count is off. So it'll cause you to reevaluate. Now, rule 1, wave 2 can never retrace more than 100% of wave 1. Number 2, wave 4 can never retrace more than 100% of wave 3, and usually not more than 20% into the territory of wave 1, at least on the slower, more docile currencies. Number 3, wave 3 can never be the shortest impulse wave of waves 1, 3, and 5. All right? Let's go on, close this up, and let's show you how knowing those rules helps you know where to set your stops. Look at this diagram here. Rule 1, wave 2 never retraces more than 100% of wave 1. The intent in understanding that rule is to catch the wave in a wave 3. You want to surf all the way through that wave 3, okay? Entering at the beginning as much as possible, and then exiting at the end of wave 3. This helps you understand how to tell the beginning and then where to set your stop because of these basic rules. Figure 3 below shows a wave, five waves of a wave 1, and it's followed by 3 waves of wave 2. Remember, wave 2 usually retraces more than half and sometimes up to 100% of wave 1, but usually makes it about a 0.618 retracement level on your Fibonacci retracement tool of that wave 1. So look to buy at a 0.618 retracement of wave 1. Now, you could wait and watch it until it gets to its actual point of ruin, which may be at 0.764, maybe just go to 0.85, and possibly even up to 100%. But if you can't just watch your computer screen the whole time, waiting for it to reach that point, this 0.618 retracement level is a very good place to be entering a trade, because 2s very typically will go to that point and then turn around and take off on wave 3. All right? Now, wave 3 is usually the longest impulse wave. All right? Very important. This is a coveted trade. This is why it's such high volume. It's why it's such high energy. That's why it moves the fastest, generally speaking, of the 3 impulse waves and the farthest, because you have such a high volume of traders in the market jumping in on this wave. Now, where to place the stop? Once a buy position is initiated, say right here at the termination of 2, a protective stop can be placed 2 pips or so, and I like to go sometimes 4 or 5 pips below the origin of wave 1. The reason for that is simply because sometimes the difference in brokers' feeds on your charts will vary. If you looked at 3 different charts from 3 different brokers, you might once in a while see one of those charts allow the feed to break a pip below the origin of 1, or in some case a pip below the origin of 3, but it hasn't really broken the rule. It's just the broker's feed that's showing it. That's unfortunate. I wish it weren't the case, but once in a while that happens. So compensate for it. Set your trade or your stop 2, 3, sometimes 4 or 5 pips. I like to set it below the origin of 1, just to make sure I'm not going to get stopped out unnecessarily. But if it ever goes below that amount, you can count on the fact that your wave 2 is not a wave 2. You've miscalculated your wave count. You need to reevaluate and start again. And it's good that you had a stop there to stop any further losses of that trade. Now, on this particular scenario for wave 2, I'm trading it right now. I'm sorry, not right now, but last night I was trading it, tracking the point of ruin of a wave 2. I made some great pips on the way down trading that wave C. I anticipated it coming, and sure enough it happened just like we tracked it, just like we planned it, and I waited until it reached a 0.618 retracement level. Now this particular wave 2 on the diagram here is not showing, it's showing more of a 0.382. 618 would be approximately right here. That's about the level of the C wave that came down against the wave 1 last night when I was tracking it. Now I wanted to go to bed. It was about 2 in the morning when it reached the point where I figured, you know what, I'm going to enter my trade right here at about a 618 retracement level and take the chance that it may retrace lower than that, because wave 2 can retrace up to 100%. But I don't mind so much that, as long as I'm pretty darn confident I'm in a wave 2, I know that wave 2 is not going to retrace below the origin of wave 1. And that is how I know how to set my stop. I enter my stop order right here, just a few pips below the origin of 1, and then I'm protected. I can go to bed and sleep easy, knowing that if for some reason a violent reaction happens in the market that I haven't anticipated, a terrorist attack, heaven forbid, that causes just enormously violent reactions in the market, I know that that wave 2 is going to get, this retracement will stop out and prevent me from losing any more than that amount. Okay? Even if it blows through it in such a terribly violent reaction like terrorist attacks cause, at least you can go back to your broker, call them on the phone and say, hey, I had my stop set at this price, here's the documentation showing on my trade report, and in almost every case your broker will honor that. Okay? And if they don't, if you have one broker that doesn't honor that, who's unethical, that's the time when you would have a complaint for the NFA, National Futures Association, or the CFTC. Now, but typically speaking, your brokers are going to honor those stops if you've placed them. If you did not place a stop, you will not be able to expect your broker to honor anything but a margin call. Okay, and the margin call is when he calls in all bets, takes whatever you are drawn down in your position, so he can minimize his own risk as well, because he doesn't want you drawing down below or into the negative, below what your account has in it, because then what if you can't pay up? Okay, that's why they have a margin call that's automated in the system at a certain point. So here we got a stop set below the origin of wave 1, and then look at over here. Here's our A, B, C retracement level. We're going to set a stop just below the point of ruin of wave C. Why? Because this is where we're going to have a dramatic swift reversal on a wave 3 coming up in this long position. You want to set your stop just below it, so that if, again, you have a violent reaction and it goes opposite against you unexpectedly, or your wave count is in error, it will stop you out and prevent losses. This is called a professional stop. And knowing those 3 basic rules about Elliott wave are what going to help you to set those stops. You'll set them here at the termination of 2. You can set them again at the termination of wave 4. You can set the stop at the termination of wave 5, just above it here, so you can trade the wave A. And you can set the stop at the termination of wave B, so you can trade the wave C. Pretty simple, isn't it? That basic rule, those 3 basic rules help you understand how to set your stops in reasonable, responsible, professional locations, so you can count on minimizing risk, as well as sleeping easy, going to bed, and being able to wake up to a great positive trade, just like I did this morning. I set my stops at the termination here. I also set my buy position at 618. It did retrace about 80% instead of 618, but that was okay because my rules gave me peace of mind, and you can count on these rules. If your wave count is accurate, you can sleep easy, because this morning I woke up, I was already 60 pips in the positive on a wave 3, anticipating another 250 pips by the time we reach about 1 o'clock today. And then I'll close my trade and consider a reverse on a wave A for wave 4 for the rest of the day. All right, that's enough for how to place your stops. Let's close that up and move on to our next section.